This is public television for northeastern Pennsylvania, WVIA TV, Channel 44, Scranton, Wilkes-Barre, and Hazleton.
Channel 44's presentation of the nightly business report tonight is made possible by a grant from the Susquehanna Savings Division of Atlantic Financial Federal, Pennsylvania's first statewide federally chartered savings and loan association.
Around the nation, the world of high-tech computers is starting to make it a little easier for individual investors to get to Wall Street. In Memphis, the chairman of Malone & Hyde talks about the growth his conglomerate anticipates this year. And in New York, Adam Smith reviews the budget President Reagan proposed today and looks at one item with considerable interest.
Those and other stories on the Nightly Business Report. With Del Frank, Linda O'Brien, and Paul Kangas. Brought to you by Digital Equipment Corporation, the world's second largest computer company, providing computer solutions for professionals from professionals. Pacific Telesis Group, including Pacific Bell and the Pactel companies, leading the way in the information age. And public television stations throughout the nation. Now, the Nightly Business Report.
Good evening, everyone. On Capitol Hill, the Reagan administration today presented Congress its proposed budget for fiscal year 1985, which begins next October. The $925.5 billion federal spending plan calls for no sharp spending cuts or tax increases, and Washington correspondent Helen Whalen says if Congress goes along with the president's requests, another large federal deficit is in store.
Administration officials say if the budget presented today is accepted, the deficit for fiscal year 1985 will hover at $180 billion. That's only $4 billion less than what it is now.
The 1985 budget can be characterized as a fiscal stabilizing action.
The deficit assumes that Congress will bring it down by $100 billion over the next 3 years. But Stockman says because of the upcoming election, Congress will only act on around $20 billion of that for fiscal year 1985.
Just on the basis of prudent observation and realism, it's fairly clear that big sweeping changes are not feasible or likely to happen in this Congress.
The fiscal year 1985 deficit reductions will come from closing tax loopholes to a tune of $8 billion, cutting spending for social programs by $6 billion, and from playing around with figures on defense spending.
Now, last year, for 1985, we had projected defense higher than we're now requesting, and the difference is $13 billion.
In fact, the administration plans to increase its defense spending by $48 billion next year. If the administration gets what it wants, it predicts the economy will continue to grow at close to its present rate for the next 5 years. Inflation will fall from its current 5% level to 3.5% by 1989. And interest on 90-day T-bills will fall from their 9% level now to 5% in 1989. If Congress fights the president on his budget, Stockman says the deficit will balloon to well over $200 billion during the next 2 years. In addition,
it would be more difficult to have interest rates coming down. We would not expect to see inflation coming down as well. And I would think that we would not have the same robust rate of growth.
the administration's budget briefers would not disclose just how they plan to bring down future budget deficits. On the question of huge tax increases, Treasury Secretary Donald Reagan told reporters the administration would not seek to specifically raise taxes. But if, in its efforts to broaden and simplify the tax base, more revenue was raised, he said that would be just fine. In Washington, Helen Whalen for the Nightly Business Report.
The nation's #1 steel producer, U.S. Steel, has agreed to buy the 7th-ranked steelmaker, National Steel. The deal calls for National Steel's parent company, National Intergroup, to receive cash and securities worth $575 million. In addition, U.S. Steel will assume National Steel's outstanding debts. National Intergroup Chairman Howard Love says the sale provides a unique opportunity to reposition National Intergroup, while U.S. Steel Chairman David Roderick says the acquisition will improve U.S. Steel's efficiency. U.S. Steel stock today closed at 29 3/4, down 1 3/8. Let's now find out whether Wall Street managed to break out of that steel cage that it's been trapped in for the past several weeks. Paul?
No, this market just can't iron out its problems, Linda. Yesterday's closing loss of nearly 1 point made the Dow Industrial Average a net loser of just over 38 points for the entire month of January, which, according to the popular theory, means the market will end 1984 lower than where it began the year. This backed up the Super Bowl predictor, which also said it'll be a down year on Wall Street because the AFC Los Angeles Raiders were the victors. On the theoretical front, then, about the last thread of hope left for the Bulls was the fact that 1984 is a presidential election year, and historically the market usually goes up in one of those. Maybe that's where prices took their cue from on today's opening on the New York Exchange, as the industrial average struggled to just over a 1 3/4 point gain by the end of the first hour of trading. Advancing issues took a 7-5 lead over losers on opening hour volume of 26.6 million shares, a million more than yesterday. Like the few other rallies we've seen recently, today's early attempt didn't even come close to overcoming the heavy cloud of bearish psychology enveloping the street. Even some veteran analysts were throwing in the towel, saying that the bull market was over. Chances are they're the same ones who kept predicting the 10% market correction that never came last year, but won't admit that this is it because they didn't predict it. In any case, by 1 o'clock, the industrial average fell back into familiar territory with almost a 3 1/4 point loss as decliners led gainers 7-6. The official unveiling of the 85 federal budget, seeking no major spending cuts or tax increases, sent the market still lower in mid-afternoon. As I see it, the major negative is that the proposed $180 billion deficit assumes a very strong economy, which may be a bit optimistic in light of the recent flurry of downgraded earnings estimates for the year coming from corporate America. By 3 o'clock, then, the industrial average was off 10 points, with losers leading gainers 9-5. The market managed to stem its retreat in the final hour, but the attempt to stage a rebound was disappointing, since the best the Dow Industrial Average could do was cut its closing loss to 8.27 at 1,212.31. Transport's off nearly 4 1/4 points. Utilities the only gainer, up just 0.04. Fractional losses in all the broadly based indexes. That's our first look at Wall Street. Back with details shortly. Linda?
Well, by contrast, gold and silver prices made substantial gains for the second day. In London, gold closed at $377.88, up $4.75. In New York, gold settled at $379.30, up $5.50. Silver finished at $8.75, up 22 cents. The dollar fell today, taking its sharpest decline against the German mark. In New York, the dollar closed at 2.79 Deutschmarks, down from 2.81 marks, and the British pound moved up nearly a penny to $1.41. Dealers said the dollar was pushed down on anticipation that U.S. interest rates will drop in this election year. Del?
The Commerce Department reports that the nation's factories ended last year on an up note, receiving 1% more orders in December than they did in November. The moderate gain reflected a 1.8% increase in orders for non-durable goods and a 0.2% increase in durable goods orders, revised upward from an originally reported decline. Analysts say the report showed signs of an upturn in capital spending by businesses as orders for capital goods not related to defense rose 2.2% during the month.
Another report from the Commerce Department shows that business inventories declined by 0.1% in December, for their first decline since July. That brought the ratio of supplies to sales to a record low, with only 1.4 months' worth of supplies on hand. Also down in December was construction spending, which declined 0.2% from November's levels. However, during 1983, spending on construction projects ended 10.3% above levels of the year before.
Investment information on companies has long been the domain of stock market brokers, analysts, and other professionals. But now the high-tech sector of the business of America is making it possible for individual investors to get information in their own homes that was once available only to the pros. Gene T. Bloom of our New York Bureau reports on a new way to gain access to that information, as well as the markets themselves.
The increased popularity of home computers is helping bring Wall Street to Main Street. Standard & Poor's, which has been providing financial information in printed form for 120 years, recently introduced a service called Stock Pack 2, which can provide this information to investors on their Apple home computers. Stock Pack 2 provides monthly reports on PE ratios, sales, stock prices, and other data on 4,500 companies. It's intended to provide investment decision-making information. S&P calls the initial response to Stock Pack 2 thrilling.
We wanted to create a truly state-of-the-art product that worked better than anybody else's product, that did more things than anybody else did, and that also cost far less than anybody else's, and we've done it.
The price for S&P's data on 1,500 companies is $245 a month. But investors are able to do more today than just get information.
We buy 800 at
A company called Instanet says it's the first to provide a service that enables an individual to make stock transactions by using his own personal computer.
Most significant difference is in our ability to take the order from the end user, route it correctly to the appropriate market center. We do a search for the best price when the order is entered, get it to the correct market center, execute it, and get it back to them in a very fast and accurate fashion.
How fast?
Generally, we can get a round trip as quick as 30 seconds.
For this service, Instanet charges a minimum monthly fee of $300 and initially says it's selling the service primarily to brokerage houses. If these kinds of services are widely accepted, trading volume of 150 million shares might no longer be considered a big day.
My personal belief is that we could go to 500 million share days, and the efficiency of this kind of system would just enhance it, and we'd have a much more liquid market, and more people would know what's going on in a much shorter time frame.
However, analysts who say these new products can be good research tools say they won't cause significant increases in trading volume for at least 10 years. In New York, Gene T. Bloom for the Nightly Business Report.
Well, Paul, are you ready for 500 million share days?
Absolutely, Linda, especially if 400 million of it is up volume. Let's have a look at those closing averages again. Lots of down volume here. The industrials off over 8.25 points. Transports down nearly 4.25. The only gainer, the utilities index, up 0.04. Trading volume today down about 6.5 million shares from yesterday's pace, and a lot more down volume than up volume, nearly twice as much. 670 issues closed higher, 953 lower. 20 new highs for the year, but 26 new lows. Topping the active list on just over 2 million shares, the AT&T new stock showing no change. Then the original AT&T down 1/8. General Motors was off 5/8. That bellwether stock not sending the market in the right direction these days. Houston Natural Gas up 2 7/8. The company is suing to stop Coastal Corp from gaining control at $68 a share, and now is in the process of turning around to possibly take control of Coastal. IBM, another bellwether stock, not moving in the right direction for the bulls, fifth in volume, down 0.5. National Semiconductor off 1/2. The Wall Street Journal reported yesterday that a grand jury may indict the company for knowingly producing faulty equipment for military contracts. Comdisco, recently hard hit, down another 5/8 today. Texaco trading ex-dividend gained 1/4. There you see National Intergroup, which is selling off its National Steel subsidiary to U.S. Steel for $575 million. Up 5/8. Chrysler, 10th in activity today, edged up 1/8. Some talk that Chrysler may reinstitute a cash dividend sometime this year. ASA Limited, a gold stock, up 3 1/4 as the precious yellow moved higher. DuPont down 5/8. Eastman Kodak dropping 1 1/8. Exxon managed an 8-point gain. Scott Paper down 5/8, even though it had tremendous fourth-quarter earnings increase, 71 cents up from 6 cents the year before. Even good earnings, the stocks go down. Bad earnings, they go down. Seagram's up 1/4. It boosted its quarterly dividend from 17 to 20 cents a share. And Xerox, a 5-point loser yesterday when the company lowered earnings expectations for this year, down another 1 3/4 today. Ronson Corp, the best percentage mover of the day, up 3/8. The company has developed a new rare earth with unusual magnetic qualities. C3 Incorporated, up 3/4. The company apparently up on the news that Atlantic Research has purchased 4.2% for investment purposes. Ames Department Stores, up 2 1/4. Company's stock was recently recommended on this program by Growth Stock Outlook Charles Allman. He's the head of the Growth Stock Outlook. The company also reported today a 71% increase in December sales. Raychem, the major casualty of the day, plummeting 13 points. The company merely said that it expects a flat 84 in earnings and just slightly higher revenues. Commodore International, which lost over 5 points yesterday when 4 major executives resigned, and the company said it'll have to delay the introduction of its 264 computer off another 2 today. And Pantry Pride down 1/2, the company bidding $82 million for Devon stores. Pantry Pride not that long out of bankruptcy itself. Over in the American exchange, about 1 1/4 loss in the index, trading volume down 250,000 shares, and declining issues led gainers by a 3-2 margin. Topping the active list on 550,000 shares, Dorchester Gas up 1/4 point. Wang Labs second in volume, also up 1/4. Thai Communications down 7/8. No change in Dome Petroleum. Amdol fifth in activity, up 3/8. Amdol recently reported a nice increase in quarterly earnings. Park Electrochemical up 2 7/8. There's some talk around the street of a possible buyout there. Sterling Software down a full point. Saw no specific news to account for that. Over-the-counter trading, exactly a 2-point loss in the index. Trading volume up about 5 million shares from yesterday's pace, but the advanced decline ratio 11-5 in favor of losers. MCI topped the active list off a point. Intel down 1 1/4. American International Group also down 1 1/4, but Tandem Computer rose 7/8 on nicely higher earnings, and CalFed lower earnings, down 1 5/8. Service Merchandise higher earnings out today, up 3/8. Apple Computer lost an 8. Tandon Corp down 5/8, even though it had nicely higher earnings for the first quarter, 18 cents versus 12. Liz Claiborne down 1/2. Lotus Corporation profit taking down 2.5 points. With all the, we have some big movers in the NASDAQ. Devon Stores, you see, up after Pantry Pride bid about $18 in cash and stock. Regis Corp, higher earnings, up 2 1/4. Pizza Time Theater sliced for another 3/4 point loss after estimating bigger than expected fourth quarter losses. With all the talk about the slowing economic recovery, the bond market edged slightly higher today, despite hesitation on the part of investors prior to the release after the close of the Treasury's quarterly refunding needs. Some of today's buyers of bonds were banking on a smaller than expected refunding operation next week, and as it turned out, the Treasury's needs of $16.25 billion of 3 10-year notes and 30-year bonds were at the low end of estimates. Looking at the long-term Treasuries of 2013, a 3/32 gain, no change in the American telephone bonds of 1990, and an 1/8 gain of these advertised municipals. The Fed funds rate closed at 9 11/16. That's our Wall Street wrap-up. Linda?
On Capitol Hill, Chrysler Chairman Lee Iacocca today warned that another recession could occur by the middle of next year if nothing is done about mounting budget and trade deficits. Testifying before a House Banking Subcommittee, Iacocca said those deficits are destroying the efforts of American companies to be competitive on world markets. Iacocca also endorsed a proposal to develop long-term strategies to make American industries more competitive, and he urged Congress to focus financial aid on companies in essential industries.
Malone and Hyde, headquartered in Memphis, Tennessee, is one of the nation's leading food wholesalers, providing goods and services to more than 2,300 independent food stores in the Midwest. The company also operates a chain of more than 100 self-service auto parts and repair shops called Auto Shacks, and has interest in sporting goods and drugstore chains. Malone and Hyde's current goal is continued expansion of all of its operations. And the company's chairman and president, J.R. Hyde III, went on the record to discuss that goal with Myron Lowry of our Memphis Bureau.
What philosophy does Malone and Hyde live by that enables it to operate as such a diversified growth company?
Well, I think the basic philosophy that enables you to operate in several different industry segments is that you have to have very strong leadership in each business group and keep 95% of the decision making at the segment level. Because you know, most people work a lifetime just learning one industry or one business, and when you're in 4 or 5 different industries, you've got to have very dedicated people that can make most of the decisions right there on the firing line in that business segment. It'd be an impossible task to operate a diversified company with most of the control and decision-making made centrally.
Malone and Hyde is primarily a food distributor, and you entered the specialty retailing business in 1966. Why this specific area?
Well, in the wholesale voluntary food business, really you only succeed as your retail customer succeeds. So to properly support that merchant, you have to constantly think retail and be very current in your retailing techniques and all. Likewise, one advantage of food wholesaling is you work with a diverse group of food retailers addressing many segments of the market. And specialty retailing is really just the successful segmentation of any given market, whether it's general merchandise, food, drugs, you name it. And so we felt very comfortable with specialty retailing for those reasons.
Why not convert the specialty retail business into independent retailers that are supplied support services by Malone and Hyde in the same way the food distribution business operates?
They have different characteristics and costs associated with those businesses. In food, why it's such a natural marriage between independence and a supplier such as ourselves is that over 50% of your cost in a supermarket is labor. And of course, in supermarkets, you have very large workforces per store. So it gives the individual a real opportunity to be able to get more productivity with him right there working in the store. If you go into an operation such as an auto shack, their labor is a substantially less component in the situation. And it's much more of a cookie cutter type program, which lends itself to a chain level of execution. Another factor in food is it's such a diverse market. We want lots of different retailing formats out there meeting the consumer demand. Whereas in auto parts, we're addressing one market segment, which is the do-it-yourself segment. So we're shooting with the rifle rather than a shotgun.
How would you describe any weaknesses at Malone and Hyde?
Well, I'd say that our biggest challenge continues to be the development of the people side of the equation, because in retailing in general, whether it's food or specialty retailing, again, it is a labor-intensive business, and so it's having the right motivation of your employees and your managers that are going to make the difference. And your biggest challenge, you know the opportunity is there for your product, but it's manning the number of units you're trying to put out there. When you're trying to build 100 stores in 1 year and you've got to add over 1,000 employees, that is a tremendous challenge from a training recruitment point of view.
What are the short-term and the long-term goals of Malone and Hyde?
Our long-term goal is to be #1 in market share in each of our business segments. And we've been very successful in having leading shares to date, and we want to continue that trend while growing the company at better than a 15% rate in sales and earnings, and having a high return on shareholders' equity. In other words, the investors will enjoy a high return in both market appreciation and dividend yields.
Thank you. I've been speaking with J.R. Hyde III, the president and chairman of the board of Malone and Hyde Incorporated in Memphis, Tennessee.
Coming up, Adam Smith talks about what may be the most important line item in the new federal budget.
Sperry Corporation reports that its earnings rose 84% in the quarter ending December 31st to $1.42 per share. Sperry chairman Gerald Probst said the profits rise resulted from increased sales of defense electronics and aerospace equipment and restored profitability at the company's farm equipment division. Probst said the improvement in earnings at Sperry is expected to continue into the current quarter. Sperry Corporation stock today closed at 45 1/4, down 1/2.
United Auto Workers Union President Owen Bieber today harshly criticized General Dynamics, calling the military contractor the nation's premier symbol of the arrogance of corporate power. Bieber accused the company of anti-labor and anti-taxpayer activity, including overcharging on Defense Department contracts, and he vowed to launch a campaign to inform the public of the corporation's alleged misdeeds. A General Dynamics spokesman called Bieber's statements outrageous and a rehash of past charges against the company.
McDonnell Douglas appears to be one of the biggest corporate beneficiaries of the federal budget President Reagan recommended to Congress today. The proposed Defense Department budget calls for $8 billion in purchases from the aircraft and missile manufacturer. That's about $1.5 billion more than in the current fiscal year. McDonnell Douglas stock today closed at 58 1/2. It was unchanged.
President Reagan's proposed budget is also of interest to tonight's commentator, Adam Smith, who gives us his perspective on one budget item that continues to defy efforts to bring it under control.
It was bells and whistles and a dog and pony show today when the administration rolled out its annual budget. You can buy the complete budget of the United States, all parts included, for $51. And leafing through it, I'm struck immediately by how the numbers are, let's say, cooked, or at least sautéed. What's the one item that can't be cut from the budget? Not defense, not Medicare, not entitlements. You can cut all of those if you absolutely have to. The one item you must pay is interest. If you don't pay the bondholders, the government has no credit. And of course, the bigger the deficits, the higher the interest. The national debt and interest on the debt are growing faster than the GNP. Budgets are not exactly meant to be believed, and there are assumptions in this budget that shouldn't be believed. For example, the budget lads assume that interest rates will drop, and therefore interest costs on Treasury borrowings will drop, and therefore so will the deficit, and therefore interest costs will come down some more. Most observers fear the other direction. They think the deficit will get bigger, interest costs will go up, interest on the interest, and the deficit gets even bigger. So check the assumptions. The Congressional Budget Office says we're talking $300 billion a year in deficit within a couple of years, and with those numbers, it would be hard to sell anybody a bond. So we come back to the familiar problem: how do you close the gap? The budget director, David Stockman, said recently, you can't cut spending. The military increase is already in the pipeline, and Americans don't want to give up farm price supports and education loans and all the other goodies. They like them. If you can't cut spending, what's left? Nobody wants to say the word tax, so they have new words like revenue enhancement. Do you know what a tax increase is? Tax base erosion control, so help me. And how about down payment on the deficit? That means a deficit of $500 billion instead of a deficit of $600 billion. If it weren't so serious, it would be funny. This is Adam Smith.
Speaking of which, here's tonight's last word with Paul.
1 U.S. cent may not be worth a whole lot these days, but it's still worth more than Britain's smallest denomination coin. That's the halfpenny. The British halfpenny is currently worth about 3/4 of a cent, and according to the London Standard newspaper, the coin is practically useless except as a makeshift screwdriver. Agreeing with that assessment, the British government today announced plans to phase out the halfpenny out of circulation by next year. Now, there are those who say similar action should be taken with the U.S. penny. But if that happens, what do we say then? A nickel saved, a nickel earned?
This evening's McNeil-Lehrer report is made possible by grants from the Columbia Insurance Company of Bloomsburg and the Northeastern Envelope Company of Clark Summit, with envelopes for every purpose.
I'm Jeffrey Lyons, co-host of Sneak Previews. And I'm Neil Gabler, and next time we'll review 4 new movies, including Ziggy Stardust and the Spiders from Mars, a David Bowie concert film, Gospel, featuring some of the greatest singers in gospel music, and Reuben, a bittersweet comedy about an alcoholic poet. So join us for these movies and more next time on Sneak Previews.
Watch us on Thursdays for Sneak Previews, the consumer's guide to the movies. Then at 8:30, Julia Child's back, sharing some scrumptious new recipes on Dinner at Julia's. Later on at 9, Bob Vila shows us more of his building tricks on the all-new This Old House. Then at 9:30, take a peek at what the technology explosion has in store for you on New Tech Times. See how great TV can be. Thursdays on Channel 44.
Okay, here we go.
Now hear this. Load rocket ship for takeoff.
Gee, Dad, I can't think of any crimes I've committed. Lately?
Quiet, secluded. People will drive by, point to it, and say, there lives Kathleen Louise Anderson. Well, what do you say to that?
How soon do you think she can move out?
Find out why? Father Knows Best. Saturdays at 8:30 and Sundays at 5:30. Only on Channel 44.